Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on our podcast, I have Kellie Bonnici. Kellie became a mortgage agent in 2018 after purchasing 2 rental properties. Getting licensed was an unexpected plot twist in her life and one she's thrilled about. She's always happiest in her work when she's helping people, and in her role as a mortgage agent, she gets to help her clients with something that's really important, and she truly enjoys it. It's a win-win. Welcome to the podcast, Kellie.
Thank you. Yeah, happy to be here. Thanks
You
for
know,
having me.
Yeah, no problem. You know what? I was going through. I just like usually I go through people's bios, obviously, and I'm trying to understand them right before the show, and I'm looking at your website. I really love your website. I don't know
Thank
what it
you.
is. It is pretty nice. Like I often find like there's no reason not to have a good website, and I feel like yours is something that it's probably one of the top ones I've visited for mortgage
Ooh,
brokers. So right
I
off the bat,
appreciate that. Thank you.
for my listeners, just check out the website, even if you don't need a mortgage, just because I really like it. It's just designed so well. There's flow, there's everything well written, the colors, everything was so nice. Um,
Thanks.
but getting back to what I was on the website for was your bio. I just want to know, why don't you give our listeners kind of a walkthrough of like what got you into the mortgage industry, how you kind of decided you're going to be a mortgage broker. I said a little bit, there was a
Mhm.
spoiler there in the beginning, but what kind of got you involved and how you're kind of here today.
Okay, yeah, absolutely. So, I mean, coming in off of the nice things you just said about my website, I was a web designer in
Oh,
my
there you
previous career. Yeah,
go.
self-employed as a web designer. And so that does kind of lead into the transition. So, as someone who's self-employed and without any kind of pension plan to fall back on, it's like, getting older, nearing 40 at the time, I was like, okay, what am I doing exactly for my retirement plan? So, I bought a couple of rentals and then became friends with my dad's mortgage broker at the time. At the time, my goal was to buy 1 property a year for 10 years. And so I was always asking him questions
Oh,
to
nice.
understand the qualifying guidelines and like, how am I going to do this as someone that's self-employed? And, you know, uh, yeah, just always trying to figure out what my next move was. And eventually he suggested that I should get licensed and come and work for him. And he worked on a lot of really tough B deals, and I thought, no flipping way, like that sounds like such a difficult
Mm.
industry to work in. You're dealing with all of these rules and challenges. And I was happy at that point in my web design career, and I thought, no, not for me. He unfortunately passed like 6 or 8 months later, and at his memorial service, all these people talked about how helpful he had been for them, and it helped me to see the more human side of the industry. And that's what really appealed to me, was being able to help people with something that's really important to them and makes a big difference in their lives. So yeah, then I got licensed in late 2018 and started working in early 2019.
Yeah, no, I mean, I know, I would say I had a similar mindset when I was younger. When you look at like kind of, and I'm looking at the entire. I'm not just looking at mortgage brokers. I'm looking at lawyers and everybody, and it's like, oh my god, it's just a cash grab. But when you
Mm,
really look into the industry, and I'm a real estate lawyer for quite some time. It's not just about. It's not a cash grab. It's more of a, you see the smile on people's faces because you actually work to make their dreams come true. Because whether
literally, yeah.
yeah, and it's because everybody's got a dream. You've got families, you've got growing families, and to be able to put them in a good house, a good home where they could raise their kids properly or live the life they want to, it's not something
Yeah,
small. It's a huge, huge thing.
absolutely. Yeah. And so that in that way, it's super satisfying. I didn't even really fully understand the financial side of it in terms of the income potential. Like that part
Yeah,
is still blowing me away, frankly. Yeah.
yeah. So then, with your previous kind of line of work where you're doing web design, how did that help you in the mortgage broker industry? I guess you're used to the self-employed part of the game.
Mhm. Yeah, definitely used to being self-employed. And I think a lot of being self-employed is mindset and being able to cope with all of the ups and downs of being self-employed. Um, and some things are the same, like that you need to have good systems and processes in place in order to
Yeah.
run a successful business. Um, yeah, and that you need to be able to get out in front of things, take responsibility for yourself and the people that are working for you. So there's definitely, some similar elements in that way. Um, yeah, and like I said, I think mindset really is a huge part of it, and being able to kind of deal with the roller coaster, the self-doubt that happens.
Yeah.
Um, yeah,
So
yeah. So I
you
think
kind
it
of, it
set
was
me up
not
well.
like, sorry, what were you saying? I think I
I
cut
said I
you.
think it set me up well in that way.
Yeah, no, because I feel like a lot of people entering, and especially the self-employed stuff, there's a lot of self-doubt because if you're working with somebody else, there's often you're not answering the same questions, and the problems don't all end up at your desk. And by problems, I don't mean problems in terms of doing anything wrong. Sometimes there's always something that you got to answer, and
Mhm.
the last person, or the first and the last person, is you. So, um,
Exactly.
when you started, you said, okay, so on your bio, you started 2018. My question here is, did you ever meet like a client in person? Because I know after COVID hit, everything became digital. Before that, I felt like a lot of it was in person meetings.
Right. Yeah. So because of my web design background too, like doing things digitally comes really naturally for me. So for the most part, I did do things digitally, but I would meet people if
Hmm.
they wanted to, especially earlier in my career. It was more like do whatever, the
Yeah.
client wants, basically, right? You want to talk at 8 p.m., no problem. You want to do this, no problem. But as I've gone on in my career, yeah, I more switched to a completely digital process. And if people talk about meeting in person, no. But even still, I only met a few clients in person pre-pandemic.
Yeah, I think clients in general are more open to meeting like we're doing right now over webcam, just because
Mhm.
it saves so much time, saves drive time. You can pretty much talk whenever, right? You could do it during your lunch break during the day, so there's a
Yeah.
lot there. I just
Mhm,
feel
mhm.
the one thing is that, and I guess this would be where your digital focus would really help you out, is when you're doing everything online, being able to convey as much information is sometimes more, or it was more difficult before, because I feel like the systems and processes as an industry, okay, was not as refined. Now I do
Mm,
feel like it's just easier for you to, for example, create content, and then people can kind of listen to it, and they don't necessarily need to talk to you before they get an understanding of who you are. This podcast is a perfect example. So before they even call you, they kind of understand who you are and what you stand
mhm.
for and where you're from, instead of having that conversation over and over again with every single
Or
client.
yeah.
So, and it's not that there's anything wrong with having a conversation over and over again. I think that's how it used to be done. But with this, you can have a genuine understanding of who Kelly is without actually talking to Kelly directly. So,
Sure. Yeah. Yeah. There's a lot of efficiency there, right? So people can read your reviews or check out your
yeah.
website or listen to podcasts, etc. Yeah. There's other ways for them to get to know you.
So, what is, I guess, the process for working with you? If somebody wants to take out a mortgage and want to use your services, do they give you a call? Like, what does it? Do they send you an email? What's kind of the entire customer journey, I'd say, for working with Kelly in terms of taking out a mortgage?
So yeah, usually people get in touch either by email or phone for the first time. We have an initial conversation. I kind of vet them to make sure they're a good fit and they're going to qualify. And then we move on to the application process and review that with them. The deal goes live and, document collection, et cetera. That's happening, from the application process through to getting a commitment. And then yeah, hopefully super smooth, broker complete, file funds. That's the cold notes.
So are your meetings done through like Zoom, or are they done through like over the phone? Like how do
I
you
just
kind of
mostly use the phone. Yeah.
mostly the phone? So
Yeah,
okay.
I don't do much Zoom. I'll use videos occasionally if I want to walk someone through, say, like a rate comparison chart, showing them two different options. I'll walk them through this chart that I have so they can understand what's going on. Yeah, mostly phone, a screen share occasionally, but not that often.
Well, that's pretty good. I mean, I guess people are like again. It's once you develop a relationship, or you can do everything over the phone call, and I think that's where it goes down to that trust. So if as long as
Mhm.
your clients trust you, they don't need to see you. They just need to ensure that like you've got all the information. They're only kind of conveying the information as opposed to validating anything else. Um, but I wanted to kind of shift gears a little bit.
Mm.
In terms of just what's going on in the market. I know that I think it was a few weeks ago, not a few weeks, like 2 weeks ago or a week ago, Bank of Canada raised unexpectedly 100
Mm.
basis points. We've got
July 13th. Yeah.
yeah, yeah. So it was a huge jump, biggest jump in what 24, 25 years. The Federal Reserve, a lot of analysts say because the Bank of Canada raised it because there was an understanding that most likely the Federal Reserve is going to raise to 75 to 100 basis points. And as a result, you've got a lot of articles coming out that say that, for example, I'm more doom and gloom, unfortunately, but you had an RBC article coming out that says 20 to 30% a decline in housing values. You have BMO's analysts saying that there isn't a housing shortage. I feel like there's just a lot of information being thrown out there. It's saying that you know what, there's the worst is yet to come, basically. What's kind
Mm.
of before I kind of give my 2 cents up, and I have a lot of opinions on this. What's kind of your take on this entire market and what's going on?
Right. Yeah, such a big question. So, on the one hand, no one has a crystal ball, right? Like
Yeah,
people love to forecast what's going to happen, and it's easy to get caught up in that, and especially to get caught up in the doom and gloom, and those kind of sensational headlines are what captures people's attention.
yeah,
But I personally, with home prices having come down as they have, I see it as a time of opportunity for first time buyers who've been, priced out to maybe they have an opportunity to come back in the market. Of course, there's the stress test having gone up with the rate hikes that, might kind of mitigate some of that. But um, rate hikes have the effect of instilling fear in people, right? And when people are afraid, it's a great time to act for people who are not afraid. And I personally don't see house prices coming down in tens of percent further than what they came down from the peak in March. We do have a housing shortage, and that is a big part of what's driving our current situation. And, while sure interest rates have really gone up, which is what caused that decrease in prices after March. I don't know how much more they're going to come down. And I personally, I don't have a crystal ball. I'm not going to forecast into the future and say, "Oh, this is going to happen." We just don't know, right?
yeah,
And CMHC at the beginning of the pandemic was saying we're going to see major decreases in value, and then prices went up 30% and then 20%. Like it's been absolutely wild. And so, and I mean, and then in terms of other future forecasts, there's Bank of Canada that have been saying rates are going to stay low for a really long time. We're not going to see rate hikes until spring of 2023. And then they backed themselves into a corner with runaway inflation. And now we're in this mess of things having gone up so much in the last 4 or 5 months since March. So I don't know
Yeah.
who to believe. I don't know what to believe. I personally think that we have a pretty stable housing market in Canada. And like I said, I think there's opportunity in the market for people who aren't afraid to act at this point.
Yeah, no, I agree with everything you've said. I just find
Mhm.
it extremely funny how, like, a year ago, when buyers had to put in an offer, 100 different offers in 100 different houses, hoping to get the house, bidding 200,000, whatever it is, over the listing price, and
Yeah.
then no conditions, nothing, and they're just praying to God that it's like, it gets accepted. And then as
Yeah.
soon as you can throw in a decent offer where you can have a home inspection, maybe, or even a
Yeah.
financing condition, all of
Exactly.
these are good things. They say,
Hmm.
whoa, 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 whoa. Let's kind of.
Right.
So I feel like it's just insane. And to what you're saying, that I feel like, first of all, like, exactly what you just kind of went through, where the housing market, or the predictions on the housing market, the economics, it feels like, um, there's certain changes that are made, and it's like, oh, we're gonna stay this way, but then there's all these unintended consequences, and then you're like, now we gotta shift gears and move into one thing or another. I feel like, interest rates going up, housing prices are going down, but it's not necessarily because people don't have money, right? Or there's too much supply that the housing prices are going down. Those issues are still there. It's
Mhm.
only a mechanism of interest rates, and what individuals are qualifying for, that has resulted in, the prices going, like, down. And even now, I think I was reading this morning, GTA had a record month for June in terms of canceled listings. So sellers are
Mhm.
also holding on until, like, you know what?
Right.
If the price doesn't come to where it is, then I don't need to sell it.
Yeah, exactly. Everyone's waiting it out, right? And some buyers are waiting it out, wanting to see where the bottom of the market is. But yeah,
I,
how much lower are we going to go remains to be seen, right?
I mean, I find waiting till the bottom of the market is, it's a dangerous game to play. Not dangerous, but it's not the smartest game, because you're never going to time it out. Because as soon as you see the bottom, you'll understand when the bottom is the bottom, when it starts to go back up. And
Exactly.
if it
Yeah.
goes
Yeah.
up as fast as it went down, then it
Mhm.
doesn't really matter, right?
Yeah.
And I do feel like, I think it was a lot of analysts are saying that, you know what, as much as interest rates are going up because of runaway inflation, at least in the States, they're already in a recession, most likely. It's just about getting the data out. And if they're in a recession, once they find out, they're going to start bringing the interest rate back down. If they bring it
Mhm.
back down, we have to bring it down, because we're not going to have a high interest rate, which will strengthen our currency, bring down our exports, and then finally, like, the economy suffers even more than it already is. So I feel like it's a matter of time
Mhm.
before all these interest rates are going down. I feel like it's Q4, Q1 of next year. It's coming back down. I don't think, and as
Yeah.
soon as the interest rates go down, I think the house prices are going back up. So I feel like now it's the only
Right.
time to buy that house if you
Yeah.
can.
Yeah. Would like to be as optimistic as that too, that Q4 this year, Q1 next year. I hope so. Yeah.
Yeah,
I'm an optimist. I have been hoping that, but in conversations with clients, they're like, oh no, it's going to be at least another year or two. But we can have all the opinions we want,
yeah.
right? It's
Yeah, no, 100%. And but I
yeah,
also feel like a lot of this, the news was to kind of let the public know that interest rates are going up too. I think that's what a lot of this
right.
is, to kind of be like, okay, calm down. We're telling you ahead of time this is kind of going up, and they're
Yeah.
being as loud as they possibly can, so that nobody says I didn't hear it, and they kind of
Yeah.
know. But my
Right.
question then to you is, given the market, and what's happening now, would you recommend, variable or fixed? It's the age old
Mm,
question. A variable or fixed
yeah.
to
These are the
clients entering the
conversations.
market?
These are the conversations I'm having every
Yeah.
day. And it's a tough call. I mean, I think one thing that's not a tough call is a 5-year fixed is something I would absolutely stay away from right now. 5.25, 5.5%. That's not attractive. And it's unlikely that someone is going to win in that scenario, right? So I would think a 1 or 2 year fixed or a 5-year variable. And I'm definitely recommending a true variable with a static payment as opposed to an adjustable where the payment changes with prime. Um,
Can you
people
please just kind of elaborate on that last portion, because I don't think all of my listeners would know what a static payment is and it,
Yeah,
yeah.
for sure. So there's two kinds of variable rate mortgages. One where your payment changes with prime, and we call that an adjustable rate mortgage. And then there's another one where your payment gets set depending on what prime is at the time, either that your file's broker complete or that it funds. And your payment stays set at that particular payment regardless of what happens with interest rates. And in that true variable, what changes is your amortization. So in a rising rate environment, your amortization will increase, and in a falling rate environment, your amortization would decrease. So that, if cash flow is really important, and of course to most people it is going to be important because people have fixed budgets every month, they
Mhm.
don't want to see that payment fluctuating. So I think that's a really good option for people, and especially because with like people tend to break their mortgages, right? If you go into a 5-year, chances are, 65, 70%, you're going to break that mortgage inside of 3 years. There's a huge penalty for a fixed to break that mortgage, whereas with a variable or adjustable, it's a 3-month interest penalty. So it just allows a lot more flexibility. People don't go into mortgages thinking, oh, I can't wait to break this thing, but life happens.
Yeah.
Um, and it's good to have options that don't mean you're going to end up paying a $10,000 or $20,000 interest rate differential penalty. So that's where I think variable is the winning proposition, even though it's uncomfortable as heck in a rising rate environment.
Yeah, I mean, but the assumption is when you're taking on a fix that the rates are going to keep rising, because I'm
Mhm,
assuming variable right now is still lower than fixed. Is that right? What's like
mhm.
the average variable versus fixed rates out there? Do you know?
Yeah, it depends on whether you're putting 20% down or less. And so the discounts are between point, probably 0.35 and zero point 0.7 for an owner occupied property. Um, and so prime's 4.7. So you're looking at between 4 and 4.35 ish. Whereas a fixed is going to be low to mid fives, right? So, sure, if prime goes up another point, then the variable could end up above the fixed, but is it going to end up above the fixed for 5 years?
Yeah.
I can't make a convincing argument that tells me a 5-year fixed makes sense, even in this rising rate environment. And yeah, I walk my talk. I have 3 mortgages. I have a 2-year fixed, I have a variable, and I have an adjustable. So I've kind of spread my risk, but I can't see ever doing a 5-year fixed.
Yeah. No, I think I always, I mean, I don't think, I know I always do variable, just because I haven't seen fixed win in
Right.
a decent amount of time. I
Hmm.
understand like the stress that people have is like they
Yeah.
start looking at everything like if they're day trading. They're like, oh my god, the interest rate went up, it went down, up and down, and then they're like stressing out, just like they're doing with the house prices now. When you're supposed to like look at it over your 5-year term, is it really going to,
Exactly.
can it be sustained? What's happening right
Mhm.
now, right? So
Yeah,
that's kind
and
of,
that's a good way to put it about day trading. Like, you're not day trading with your mortgage. This is a longer term
yeah.
perspective that you need to take. And yeah, maybe your variable will go above the fixed that you could have gotten at some point, but you haven't seen the full picture until the end of that term, right? So it's that longer term perspective that people need to take.
Yeah, and that's why I always say you should be leaning on a professional, because they've seen this. If they, this is their job, so they're studying it day and night, or they should be, and most people
Hmm.
are, and they will give you that, like good counsel, good advice, which is why you're taking them on to understand maybe there's something that you're not able to kind of look at, and you're working based off of the emotions that you're feeling based on
Hmm.
what's in front of you at that moment.
Yeah.
Um, So
And that's a good point
yeah.
about the emotions that you're feeling, because that is the only time I suggest someone go into a longer term fixed. I just had a conversation this morning with a client who's in a variable, super uncomfortable with change, and he's an adjustable, I should specify, super uncomfortable with change, doesn't like his payment changing. And I'm like, if this is going to keep you up at night, then switch into a fix, because it's not worth it. Your mortgage payment shouldn't stress you out that much, right?
Yeah.
Yeah, also being very clear about the risk of the penalty, right?
Yeah. No, I mean, I've seen 10, 20, 30,000 seems normal
Oof.
sometimes because there's so many of those going across our desks. We've seen them as
Mm-hmm.
far as 80,000. So it's like
Oh my
it's yeah, it's like I
God.
feel I feel something even though it's not my money. I'm like, what the heck is going
Right?
on? But that also
Yeah.
goes boils down to the fact that like it's people are looking for and this kind of annoys me, and this is why I always say talk to your broker properly, because people always go for the lowest interest rate or whatever emotionally superficial reason they have to get a mortgage. So things that
Mm-hmm.
they feel like they understand. Like people understand the interest rate and they understand that they can read on the news that says people are saying it's going up. So they're making decisions based off of that. They don't understand that there's all these other features in a mortgage that
Mm-hmm.
will end up like if you, for example, portability is a great
Mm-hmm.
example. You maybe pay a little bit more for a portable mortgage, right? Correct me if I'm wrong. I don't know, but you
Most mortgages are portable.
yeah. So if or all these other kind of features where if you're in a situation where you like you said like you're paying a little bit even more on the interest, let's say hypothetically
Mm-hmm.
speaking, you get into a variable rate and 3 months down the line you're paying more on the interest rate, um, but if you have to sell your house, right, all of a sudden that penalty to break that is nowhere near as much as it is on that fix, because the fix it's going to be a huge amount, especially in a volatile rate environment where we're seeing the rates move, whether they go up or down, they're moving somewhere. So it's incredibly like it's incredibly important to kind of have that conversation as to like
Mm-hmm.
you're saying, life happens. What do you expect to happen in the next 5 years in your life, right? And then how are you going to get a mortgage that fits your life? Because no
Exactly.
longer is a mortgage, right? You don't have one mortgage, and you know better than I do. You've got countless lenders with countless different types of products that you'll look at like what the client needs and what fits best for them.
Mm-hmm. Mm-hmm.
So
Absolutely.
so my question then is, given this kind of environment, what do you have any advice for people who are um, first-time home buyers or even repeat buyers looking to enter the market? What kind of advice can you kind of impart so that nobody's panicking? They kind of understand what they want. How can they prepare to kind of move into this market to buy any kind of property?
Mm, I mean, it depends on, sort of more details of a person's situation, but I think it comes down to, people will, like we talked about before, trying to time the market, right? Um, One adage that I've repeated to clients a number of times is the best time to buy real estate is 20 years ago, and the next best time is today,
Yeah,
right? So
yeah,
it doesn't matter so much what's happening in the market. Is it a good fit for you? Is it a good fit for where you are in your life? Um, and I think it's always a good idea to get everything in order so that you can be approved, like so that you're approved, so that if the right opportunity presents itself, you're ready to act.
yeah. And I think to add to what you're saying, I think a lot of times people are kind of concentrating on the financial side, and is it going to go up or down? But at the end of the day, especially if it's an owner occupied home, it's where you're living, and it really has an effect on your mindset and the length of your life and the quality of life that you, your partner, if you've got kids, whoever's living with you, are going to have. And sometimes it's not about making the most money, though I don't think anybody's going to be losing money. It's not about making the most money, but it's also these unquantifiable qualitative measures that will push you into getting a house.
Mm-hmm. And also importantly, even when the market takes dips as it does, the overall trend is upward, right?
Yeah.
So even if you do overpay, um, by a few tens of thousands of dollars, that's all going to come out in the wash in the next couple of years, most likely, right? So
Yeah.
that's another kind of form of insurance or way that people can feel better if they're feeling uncertain. The overall trend is up.
Yeah, and just to wrap things up, I want to kind of use an analogy that Warren Buffett says. Warren Buffett,
Mm,
for those listeners who is a billionaire, he's a prolific investor, and he's always kind of saying that when you're looking at even stocks, and I'm using an analogy with stocks, if you think like, what, is it going to go up or down tomorrow?
mm,
All of that doesn't matter if you're looking at the value. You're going to be looking at what the company's doing for the next 10, 20 years, because it going down tomorrow doesn't mean anything, because overall it's still coming up. And I feel like it's the same thing with real estate. It going up or down, like the next month or two, it doesn't really matter. In the next 10 years, right? If you
mhm.
plan on selling the house before 10 years, I don't know, but like the next 5, 10 years, it's going to be up. Unless you're selling it the day after you bought it, that's not a good investment, and I don't think anybody
Never
does
get it.
that.
Yeah.
I think it's a good investment to have. Anyways, thanks for coming on the podcast, Kelly. Any last words?
I think just to repeat what I said before, in terms of thinking of buying, there's a lot of opportunity out there. And like you were saying too, the market has become more balanced. You can have conditions. Yeah, it's a good time to act if you can.
Yeah, no. As a lawyer, I always tell my clients to have conditions. It's the best time to have conditions, so you should be
Mm.
out shopping. Thanks for coming on the podcast, Kelly.
Thanks so much. It's been great talking to you.